Good afternoon, everybody, and thank you for joining. My name is Raynor. I'm a director here at Claim Capital, and today we're just going to be running through some of the changes from both the autumn and the spring budget, and how that's going to be affecting your R&D tax credit claims. I know there's an awful lot of you that are existing clients, which is great. For those of you who don't know who we are, we're founded back in 2018, so we've been going just under 5 years now. We work with around 800 clients across R&D tax credits, grant funding. Or can we just make sure that we're on mute when we come on? That would be very much appreciated. Oh, I'm not winning there. Sorry, can we just make sure we're on mute? Perfect, thanks. We work with around 800 clients across R&D tax, grant funding, and also accountancy services through our sister company, Jump Accounting. On an annual basis, we're reclaiming in excess of £30 million for our clients, and that really ranges from small claims in the region of £10,000 all the way up to large claims in excess of £1.5 million for large multinational corporates. The purpose of today, we're going to be looking through the key changes in legislation, the effect of that on the R&D tax relief rate, the expansion of the qualifying expenditure, and finally some of the changes that are going to come into play in terms of the process itself. So, in terms of why the changes are being made, back in the autumn statement, Jeremy Hunt, the Chancellor, was very concerned with the amount of fraud and abuse taking place within the R&D tax credit scheme. Many of you might have seen in the news or in the Times especially that was covering it, that cafes, for example, that were testing out a new type of sandwich were claiming R&D tax relief, which really wasn't the purpose of the scheme. So there's been a huge amount of abuse and fraud over the last couple of years, and really that has caused a bit of a knee-jerk reaction from Jeremy Hunt, and ultimately is why we've got the changes that are coming forward today. Secondly, they're looking to refocus the scheme in terms of where the R&D activities are actually taking place. So at the moment, for a lot of tech businesses, for example, typically you will outsource tech development to places where it's going to be more cost effective, whether that's Eastern Europe, India, South America. The Chancellor very much wants the R&D to be taking place in the UK. So we've seen some changes there too. And finally, which is a little bit more positive, is that HMRC is recognising that there is actually, over the past 23 years that the scheme's been around, there have actually been a lot of changes in the focus of R&D, and therefore things like pure mathematics and cloud computing costs are going to now be considered a eligible piece of expenditure. So let's look at the tax relief rate changes to start with. So the big one, which is probably the most disappointing for a lot of the companies on the call today, for loss-making SMEs, the benefit has been reduced from 33.5% down to a benefit of 18.6%. The reason for this is twofold. The enhanced deduction has been reduced from 130% to 86%. And secondly, the R&D tax credit has been reduced from 14.5% to 10%. And that's really what makes up the calculation of how we get down to that 18.6%. Now, in terms of how this is actually going to come in, the benefit is going to be calculated on a pro rata basis. So this is for any expenditure as of the 1st of April 2023. So if you had a June year end, for example, any cost from the 1st of July 2022 to the 31st of March 23 would be under the old scheme at the high rate of 33.5%. And any costs or expenditure from the 1st of April to the end of your June period would be under the new scheme at 18.6%. And because of that, it really is worth, if you have a lot of expenditure over the next, say, month or two that you're expecting, it might be worth trying to bring that expenditure forward, pay for the costs before the 1st of April, and therefore you're going to be able to claim under that higher 33.5% relief. Now, the big one that came in the spring budget was the fact that Jeremy Hunt has been under a bit of pressure, and therefore he's trying to find a bit of a halfway house to not reduce the incentive by such a great amount. Unfortunately, this is probably going to apply to very few companies. The intensive R&D loss-making scheme is going to be a benefit of 27%, so not quite as good as the 33%, but a lot better than the 18.6%. Now, this is only going to be for companies where the total expenditure on R&D is over 40% of the company's total expenditure. So if your company expenditure is total company expenditure is 100,000, over 40,000 of that needs to be on R&D eligible activities. The second side of this is that it took HMRC off guard, and unfortunately the legislation is still to be passed for this, so we're not expecting it to actually go through until the summer of 23, and therefore companies are going to have to actually apply for R&D tax relief under the previous scheme at 18.6%, and then amend their claims once the legislation is passed in order to reclaim the additional benefit. So it is going to become a little bit complicated on that front. For profit-making companies, the deduction isn't as bad. So it's still not good news, but it's not terrible news. So the enhanced deduction is 130. It's been reduced from 130% to 86%. But because the calculation doesn't incorporate the tax credit reduction, the benefit is only being reduced from 24.7% to 21.5%. So still a reduction, but nowhere near the same as for loss-making SMEs. For RDEC companies, so RDEC companies. Now, this is a scheme that is there for large companies. Large companies have over 500 employees, 100 million in turnover, and 86 million in gross assets. But it also applies to a lot of companies that have received grant funding. So if you've received grant funding, often a common misconception is that you can't apply for R&D tax credits. In actual fact, you can. It's just under the RDEC scheme. Now, under the RDEC scheme, it was previously 13%, and this was actually subject to corporation tax at 19%. So the actual benefit was closer to 10.5% for the business. Now, Jeremy Hunt's actually increased this to 20%, but again, you're now going to be paying up to 25% tax due to the increase in corporation tax rate, and therefore the benefit is going to be closer to 15% after tax. Still an increase, which is beneficial, bearing in mind that the rest has been going down. Now, in terms of the changes to the qualifying expenditure, first of all, let's look at when these all apply. So when we were looking at the tax relief rates, this was any expenditure as of the 1st of April. Now, for the qualifying expenditure changes, these are for any accounting periods starting on or after the 1st of April. So it's not going to be done on a pro rata basis. Now, the first big one, which is a great result, is the fact that cloud computing costs will now be an eligible cost to claim for. So if we look like AWS costs or IBM costs, we can now include all these cloud computing costs and software licenses within the claim. The second one is pure mathematics, which is obviously beneficial to quantum computing, deep tech. I think the reality is that a lot of companies were probably claiming for this anyway, rightly or wrongly, and the Chancellor has decided that we may as well include it in the legislation. Now, back in the autumn budget, there was quite a big announcement over the fact that overseas contractors, as I mentioned previously, so any R&D taking place outside of UK soil would not be an eligible cost from an R&D tax credit perspective. Again, this came under quite a lot of criticism, and it has resulted in this particular piece of legislation being pushed back a year. So if you were concerned about if you have a large amount of subcontractors and you were concerned about that coming for your forthcoming claim, that has actually been delayed, and it will be for accounting periods starting on or after the 1st of April 2024. So we still have a bit of time there. And finally, we've got some changes to the claim process itself. So the first one isn't really going to change anything. So details of any advisor are going to have to be submitted and included in the claim. From our perspective, we submit all claims on our client's behalf anyway. So HMRC always know that we are submitting the claim. The bigger one for companies that haven't claimed before is the fact that there's going to be a pre-notification requirement. Now, what this means is that for companies that haven't claimed, you're going to have 6 months to inform HMRC of your intention to file a claim for the period that you're wishing to make the claim for. So in the past, you have up to 2 years. There's no need for pre-notification. Now HMRC are looking for companies to notify them prior. It seems like a bit of a waste of time for a lot of companies, but that will be the new requirement. And that is from us. Fairly brief, but really happy to take any questions. If you do have any more, if you do have any questions, you can also book in with myself or one of the team using the link. But feel free to shout out or put a question in the chat box. Do we have any? Okay, we've got a question. For R&D intensive companies, total expenditure, is this just admin? So for the R&D intensive companies, we're going to have to show that 40% of your total expenditure as a business on both R&D, so total expenditure as a business is on both R&D and non-R&D activities. What we have to be able to demonstrate to HMRC now is that 40% of the expenditure was on R&D intensive activities. Yeah, really, we will be looking at your total expenditure, both R&D and non-R&D, and then concentrating on which is R&D intensive. Was there a question then that came through? Nope. For small SMEs not paying 25% corporation tax, what happens? So if you are a loss-making entity, you're going to be receiving the benefit as a cash benefit, but that's going to be now at the maximum of either 18.6%, or if you're R&D intensive, that'll be at the 27%. Okay. Okay, so under RDEC, are we able to claim subcontractor payments as an eligible cost? It's a really great question. So under the RDEC scheme, it is a little bit different to the SME scheme in the sense that subcontractor costs, unless they're an individual or a research institution or a charity, you can't actually claim for subcontractor costs under the RDEC scheme. So whilst the benefit is increasing, the rules around subcontractors are staying the same. If you've made a claim before, do you still need to notify HMRC 6 months in advance? No, you don't. So if you've already made a claim, providing that you've made a claim in the last 3 years, you don't need to notify HMRC. So I assume if the period of a company ends in December, these changes bearing on claims for the previous year. Yeah, absolutely right. So the changes coming in are only going to affect companies with a year commencing as of the 1st of April, or for claims where it will come in on a pro rata basis. But any claims for companies before the 31st of March 23, it's not going to affect your claim this year, but it will in your following year. 40%, is that for the whole group or the single entity? So that will be for the entity that is making the claim. So usually you would make the claim, if it's a subsidiary, we'd be looking at the individual company, not necessarily the whole group. However, we'll be considering the whole group in terms of its eligibility into the RDEC scheme or the SME scheme. Do the changes in respect to loss-making companies apply pro rata for periods before the 1st of 4th, 23? No, so any periods before that, as I mentioned, stay exactly the same. So you don't need to, they will be under the previous rules, any previous claims, accounting period, sorry, is only going to affect companies with expenditure after the 1st of April or accounting periods after the 1st of April. Can you clarify about the delay to claims relating to externally paid workers and overseas contractors? Yeah, so there is still the cap that is going to apply for companies that have subcontractors. It actually doesn't matter whether they're overseas or based in the UK. You're still capped to 3 times your total NI NI contributions and PAYE contributions plus £20,000. That isn't going to change. However, if less than 15% of that is connected parties, and you own the IP, there's relevant IP to it, you can actually get around that cap. So that's worth reaching out. If that is a worry, please do reach out and we can talk you through the options there. How do we notify HMRC? We're currently putting together a form to notify HMRC directly, so please feel free to reach out for that. There are an awful lot of questions, so thank you. Keep them coming. Yes. So for companies that are making under £50,000 corporation tax, it will be based on the tapering. So if you make less than £50,000 corporation tax, less than £50,000 in profits, you will be paying 19% corporation tax, and that will be applied to your RDEC calculation. So absolutely right, it is going to be on a tapered basis. So more than 40% of our expenditure is R&D, but a lot of this is paid for by grants. Can we still go for the 40% scheme? So yes, absolutely. What we're going to need to look at is how you've spent them. You might have to go across 2 schemes. So we'll need to have a look at how you spent the money. Some of it might be under the RDEC scheme if it's grant funded. Some of it might be under the SME scheme for non-grant funded projects. So absolutely, you can look to claim under the 40% scheme, but some of it might also go under the RDEC scheme if it's grant funded. Okay. If we are working for a large company over 500 employees to deliver bespoke software, is this SME or RDEC? Our company is 50 employees. Okay, so this is a great question. So if you're working on behalf of another entity, if you're working on behalf of a large company, you can't claim under the SME scheme, but you may be able to claim under the RDEC scheme, the RDEC scheme. So absolutely worth reaching out for. you should be able to still claim. If we finance the claim amount, can we reclaim the financing costs? No. So financing costs aren't an eligible cost for R&D tax credits, unfortunately. So it's only on costs relating to the R&D itself. I hope I've covered the majority of questions. If there are any others, please do feel free to pop them in. If not, again, I will just go back to this screen. Feel free to book in a meeting. Either myself or one of the team would be delighted to have a chat if there's any areas that you're unsure of. But bar that, if everybody is happy and no further questions, we can stop the webinar.